Hello and welcome to the Gold, Goats, and Guns podcast for Thursday, August 1st, 2024. My name is Tom Luongo, and we have a lot to talk about. It is episode 186, and Dr. Vince is back in the house because I've been trying to get this freaking thing done for like 2 weeks now because Vince blew up a story that this was the inciting incident for this podcast, and was that Vince blew up a story that somehow some guy over in China beat JP Morgan at their own game in the silver market. And I wanted to hear about this, but we haven't been able to cross schedules, get together because, well, they tried to kill Trump, and then we got, now we have quarter black Jesus, Kamala Harris, and all the rest of it. And I'm like, no, Vince, we're doing a podcast this week, come hell or high water, and we're going to go back in time a little bit, and we're going to talk about some other things that are happening. Before I go any further, though, I want to remind everybody that I will be speaking at this year's Expat Money Summit 2024 in October, and this is the biggest expat conference of the year. It's put on by Mikkel Thorup over Expat Money. I'm going to be speaking there. I'm going to be doing a roundtable with Bob Murphy, who I read for ages. I remember when Bob was a graduate student, and I've never met, so I get to meet him for the first time in a roundtable about de-dollarization with Alex Craner, and I'm obviously going to do my own presentation as well. But Ron Paul's going to speak, Doug Casey's going to be there, Tom Woods is going to be there, so many other people. It's going to be a great time, and it's free to sign up, and there'll be a link in the show notes for that. So with that said, and all the rest of it, here to talk silver, Japan, Yellen, Lagarde, all the cunts. Hi, Vince.
Right.
How you been? What's going on, man?
Hi, I'm good. It sounds like a nice little show you're going to be doing there. It sounds like a good crowd of people.
Yeah, I'm also looking forward to the Mises Donor Conference, where I'm going to be the headline. I get to do the keynote speech for that as well in October. That's a big deal for me. For me personally, it's a huge deal. So
it is a huge deal. I mean, it's like a respect of your peers. You know what I mean? Academically. All right, so I guess we start.
But no problem. But let's get started.
Oh yeah.
So I don't know where to start. I mean, should we start with the BOJ? Should we start with Yellen? Actually, I want to start with your story about silver.
Let's start with that before I forget. Right, I'm recalling it right now. The brain damage and the fact that I've had a couple beers or whatever you call these things. Okay, so all right. So let me try not to go down a rabbit hole on this. Okay, over the last 6 months, we have been talking about on Goldfix the fact that the bullion banks are short. And I was fielding a lot of questions, and gold was rallying. Silver and gold. This is about both metals. Silver is the one that we're not specifically sure about, but we know that it happened because it was implied. Anyway, during this 5 or 6 months, I was fielding a lot of questions. The usual questions: when are the banks going to blow up? When are they going to go out of business? And my stock answer is they're not. It's not big enough to blow them out. However, traders get fired. And traders have to cover short positions. And there are problems on the desk because each part of a bank will have risk that they have to manage. And if they get outside that risk, they lose money. So in the committed traders analysis, I kept noticing that there was no short covering. And then after some period, this is the whole background very quickly. Then I noticed that all of a sudden, starting March 1st, right? Starting March 1st and going consistently for a month and then coming back in waves, somebody or somebodies was buying not just gold, not just silver, but gold and silver options. Now, but it wasn't happening on the exchange. And if it's not happening on the exchange, then it has to be happening over the counter. And it has to happen over the counter. If it happens over the counter, it has to go through the big banks. And so that's JP Morgan, Bank of America, what have you. And I started to see in the committed traders reports massive, what we call negative gamma in the options positions that the banks had. And you could see it by the market would rally. Let's say gold would rally $50. And you'd see the banks sell. Do you hear that noise?
What's that?
You see the banks sell, let's say, 5,000 futures in the rally, and that's part of their business. But they end up getting short an additional 30,000, and that puzzled me until I figured out it was options being sold. And so I talked to my mainland China guy after realizing that it was macro discretionary, and I was very happy about that. But anyway, macro discretionary is buying, but I wasn't sure where it was coming from. Well, it turns out, according to my sources in China, it was what they call Shanghai traders, which is a very backhanded way of saying speculators. Well, it wasn't just speculators. It was Zhang Kai and a couple other futures speculating firms that were buying gold, buying silver, buying gold options, and they were trading with one or two counterparties. So it was JP Morgan. They were directly trading with counterparties over the counter with lines of credit. And so the banks like JP Morgan, they can't say no. That's their business. So they trade with them and they spread around the risk. But the market just kept rallying. And the questions came again from people. How are the banks not losing money? And I said, they are losing money, but I don't know who's making it. I knew it was a macro discretionary fund, but I didn't see any activity in the U.S. And so one day I'm surfing Chinese news, and there's a story that says, and I didn't know who they were at the time, Shanghai Futures makes this amount of money for the quarter. And I go, wow, that's a lot. I've never heard of them. Who would they make it from? And so a little bit of digging, it turns out if you go to the exchange, the futures exchange, they will tell you who the counterparty is directly on trade. So it's not like it's hidden. It's the over-the-counter market is almost transparent there. And long story short, the biggest speculative Shanghai traders, which by the way are indirect proxies for the Chinese government, because the Chinese government controls everything, right? It's not like, JP Morgan is at least its own company, and they may be influenced by the government, but they can, say no. They'll suffer, but if you say no in China, you might not have a job, let alone a life, 6 months later. So when the PBOC or the Central Bank of China or the China government says, to begin with, hey, we think it's okay to buy silver and gold futures now, we'll loan you money to cover that. So it's like they're lowering margin. Well, Shanghai and a couple other companies bought a shit ton of it. And then the U.S. funds got a load of it, and it went up. And JP Morgan, it's not in the press yet. We don't know what they lost. I only know what was made and who they claimed the counterparty was. So the breaking story, and I will take claim for this, in the West, I should say, is that 3 or 4 Chinese fund companies, which, by the way, were created to do this. They weren't laying around. They were like, one of the companies is a spinoff of a PVC pipe company. Like these were like off-balance LLCs created to do trading. That's what they were.
Right.
Very
There's
similar.
a lot of that, and there's a lot of that all over Asian finance, by the way. This is what Vince is describing here is very normal. You'll have like furniture companies that have a trading division because they need to have, because Asian like lending is very weird, by the way. It's different than ours. They don't lend against cash flow. They only lend against hard assets. The banks will only lend against hard assets. It's a different world than ours, just so people know.
Right. That's actually very significant. In fact, I know some people that China is, let's just say they're long on assets and they're short on trading capital, intellectual capital. Let's say that they don't have a lot of experience in derivatives, so they're hiring Westerners to manage their furniture company derivatives book. You know what I mean? Like stuff that you're alluding to. Anyway, it's like Ethan Allen is short put spreads. That type of shit. But
and I ran into this when I was studying Vietnam a decade ago, and I got this like firsthand from fund managers and the guy I was working with at the time, because he was saying things like, we'd be looking at these balance sheets of these like small Vietnamese tool and die companies and furniture companies and whatnot, and what was happening was, of course, they all had all these off balance sheet time bombs because they were all out there buying property. But the way in order to expand their furniture business, they had to go buy a hotel in Ho Chi Minh City and then lend against that because they couldn't lend against their cash flow. So they'd take their cash flow, bind it up in some property, and then get the cash out of that in order to expand their furniture business. It's all over that Southeast Asia. This is just normal.
So you're describing it. I mean, so basically I have a lot of cash flow, but I can't get a loan on my business against the cash flow. So I have to buy a tangible asset, and then I can mortgage the asset and trade it. That's fucking crazy. All right. That's funny.
but welcome to China. Welcome to Vietnam.
But that is an old school mentality that not to say that it's literally mercantilism, but it's the concept of I don't believe in the future. I only believe in the present. I need to have my hands on your collateral. What is your collateral?
Bingo. It's mafia financing.
Yeah, leave your bicycle if you want to borrow $10. I'll hold your bicycle. You won't Don Corleone, you don't need this car right now if you're going to borrow $10,000 from me. Well, sure, I need the car. No, you don't need the car. I'll watch the car for you. You spend the money, the collateral there. But anyway, so the reason this is so pointed, aside from the fact that I'm pretty excited that we noticed it and we had already had the background in place, is, and here's the bonus part. 1 week, I saw there are about 6 or 7 different stories written by some guy I know is an indirect employee of these banks, essentially, the bullion banks. And he was saying that China was manipulating gold and Shanghai is manipulating it. Anyway, long story short, he stopped writing, right, when I saw the bullion banks stop losing money. And it's all true. Like a large speculative hedge fund that actually took delivery. They weren't buying calls to make the market go up. They were buying calls to take delivery. And the accusations that came out of the bank side was, well, they're speculating and they're using the speculations to buy gold and they're taking delivery. And I'm like, well, then they're not speculating. Then they're spending money.
They're actually futures traders who want the actual metal.
Exactly. Now people are now picking up on it, and I think they're still active. So the reason this is significant is because if you want to just connect a couple dots here, China's PBOC officially stopped buying gold last month, and they had been winding down for about 3 months, right? But during that time that they were winding down, these futures funds were buying more. And during that time, while China stopped buying, India increased their buying. So it's kind of like you've got 2 elephants in the room. And look, you're the BRICS, right? So you've got India, you've got China, and let's say you've got like a bunch of small guys. Let's say it's Kazakhstan and, I don't know, some other stan, right? And China says we're buying for the BRICS because they are buying for the BRICS summit. And Kazakhstan, they're like, yeah, Kazakhstan, you can buy too. You're not getting away. India, no, you have to wait. You're going to distort the market. So China bought. They got done buying as a courtesy. India waited. And now India is buying. So India is buying gold now. China's done buying. But during this time frame, China's still buying indirectly through those off-balance sheet LLCs. Right. Incidentally, it you know what's funny? You reminded me of a structure that I was involved in. When you talked about the off-balance sheet, I just want to throw it out there. At one time, I was managing money for like $1 billion hedge fund, right? And his strategies did not include what I did, and what I did was arbitrage. He was only out to be long or short, right? I was doing both, and he wasn't allowed to invest in trading, but he was allowed to invest in firms that traded. So instead of, this is the principle, what you're talking about, but in the West, right? So for example, he only bought mines. Okay, let's just simplify it. He bought hard assets. It's the opposite of China. He bought mines and did mine financing. But he knew what I did. We knew each other. And he's like, you know what? I really want to do that. But my bylaws prohibit me from investing in an operation that is about trading. I can only deal in hard assets. I go, okay, so what do we do? He's like, I can't employ you to do this strategy. Create a company and I'll buy a piece of the company. So we had an 80-20 deal. My company was worth $1. He gave me 80 cents. He owned 80% of the company, and then he invested $10 million with me, and I traded it. And he took 80% of the profits every month. But I didn't at the time. I was too young to understand it. But it's the reverse of what you just said. It's like I'm not allowed to buy financial assets. So well, not the reverse. It's kind of like related to it. He's like he needed to invest in something real.
He needed to create the legal fiction that he was not buying financial assets while he was buying financial assets.
Right. He was buying a derivatives book. God forbid if his investors ever said, let's see this company, Echo Bay Partners. And it will be like an office with me, a computer, 2 cell phones, and a landline and a headset. And it's like, where's the refinery? Well, it's around the corner. It's outsourced.
Hold on. It's in my left front pocket. It's the old Steve Martin joke about Fred's bank. I like putting your money right here, the left front pocket. Your money, left front pocket.
That's right. So anyway, to wrap this up, this guy's still active, and the banks are short options again. And although I don't think that it's as bad as last time, I think you're going to see an increased urgency from whoever has to buy gold and silver left. Silver is part of this, even though it's not money per se, as we go towards the BRICS summit and the election. So the bottom line is,
that's an interesting point.
If you want to look at it as good versus evil, you can pick whoever you think is good and evil. The U.S. bullion banks, which never complained about manipulation when they kept the price of gold and silver down, are now complaining about manipulation because China is making the price of silver and gold go up. Literally, they're saying China is manipulating the market higher. So anyway, that's it.
Okay, well, that's fine and tough. Like it's about time, and it's clearly obvious that look. And what I've been saying geopolitically is I'm like, if we're going to manipulate the price of financial assets up, like the U.S. yield curve and the German bonds and all these other things, you're going to make all of these things so fucking uninvestable. Well, then we have to get paid on the other side, and we're going to hedge that. We're going to buy gold with that. And like you guys can continue to overprice your financial assets by manipulating the market and using central bank policy and treasury policy and all this other stuff to do that. Well, then fuck you. We're just going to call your bluff and buy gold.
Right. I also think, and this is like kind of left field, I think China and the U.S. are working together on all this, and they have minor disagreements. But since we changed Basel III, or since we announced we're going to change it, China's been selling treasuries in an orderly way and buying gold. And the U.S. has been saying fucking nothing while they're doing it.
I know.
Since when do we let people do that shit? We should be bombing, some African country now. I don't mean that literally. You get my point.
No, I'm going to say you're completely your instincts on this are completely correct. Vince. I've been saying this for a while as well, and I've been not saying it, but it's like it's been in the back of my head, and it may have leaked out here or there in a various rant, which is that Powell, if Powell's job or Powell's plan is to affect the mercantilist structure of a international and domestic dollar, and bring the Fed back into its original mandate, which is to provide elastic money to the domestic banking system and to manage the cost of credit domestically, and protect the price of gold domestically for our use, then it makes perfect sense that he's going to allow China to raise the price of gold because it's in his best interest in order to get rid of the debt by raising the value of the gold reserves that we're going to use to recapitalize the United States after these fucking vandals that are up there on Capitol Hill trying to turn this into commie land. Like this, I get it, and the Chinese, like I just read something from, just to give you an idea. I just read something this morning and I hadn't really even have a chance to like completely grok or like wrap my head around. But the third plenum or the latest plenum was just ended in China. And it's pretty much a devolution of power to the states. and to the local municipalities. And it's a big fucking deal because when you think of it that way, along with Xi's, what's the word I'm looking for? The shared prosperity platform of the last plenum, where he's saying we're going to in effect, properly privatize the property market.
No, let me jump in. Let me jump in.
Yeah, no, I'm just saying, that's where all this is starting to like fall into place now. So go ahead.
Right.
I
know what you're trying to rephrase.
Go right ahead, please.
I know what you're trying to rephrase because I have the actual phrase in my head, and the phrase was the central. I'm using paraphrasing, but it was the centralized government is going to give more autonomy to regions and to whatever the word is for states to affect local changes to support housing and whatever it is. And so it's in effect, you used the word de-evolution, right? It's in effect, they're realizing that they've taken state centralized control to a point where they have to decentralize and give a little bit of, libertarian, for lack of a better word, autonomy to regions to manage their own risk. So it's the world is reversing. We're centralizing and they're decentralizing.
Well, what I was saying about Xi's Common Prosperity Platform from the last plenum when it happened, and I have to like dredge this stuff up like you were trying to dredge up the Silver story. What I said then was like it's very clear what he's going to do. He's going to allow the disloyal ones to go bankrupt, the ones that are, well, frankly, for lack of a better term, backed with Soros money, or just just to like make it abundantly clear, those guys are all going to be allowed to go bust, and he's going to save the ones who are loyal to the party. And at the same time, he's going to look at the SOEs, the state-owned enterprises, and he's going to go, okay, it's time to start reforming them as well because they're just as freaking corrupt.
So your interpretation is
what happened.
Well, then let me rephrase what I'm saying, or let me just change what I'm saying. I thought that you were saying, this is what I took when I saw it. He needs to decentralize. You're saying, whether that's true or not, he wants those who are not in line with his policy to fail.
It's a part of that. This was the last plenum where he was setting all of this up so that now that he's done a lot of that and he's allowed a lot of these shitbags to go broke, now he can start the process of developing power out of Beijing. So it's a process. Before. This is the last 5 years and how it's played out. So now here's the payoff from what he allowed to happen. That's why Archegos and Evergrande and all these other things what happened. And and no matter how much, frankly, how much the CIA controlled media in the United States and the MI6 media is screaming about how China is going to blow up. Yeah, they have problems, and everybody has problems when the Fed's at 5.5%. Like, fuck you. Everybody has problems when the Fed won't get off of 5.5%. Everyone's screaming. Yeah, the Chinese are screaming. The Europeans are screaming. The friggin' Saudis are screaming. We're screaming. Europe. Everyone's screaming. Well, guess what, folks? That doesn't mean China's going to implode. They have options. They're now taking those options, and not saying that they still have a fine. They still have a fine needle to thread through, but they can do it if they need to, and they have a lot more flexibility than a lot of other countries because they still have a lot of, they still have some oomph within their economy. Their economy is not fake. It's not all fake and gay, folks. It's not all roads to nowhere and buildings that are empty high rises. That's not true. So
right. Okay. So when you said the previous plenum, you meant basically before the third plenum, they were just basically they were centralizing authority and letting those that were not in line twist in the wind. And now they're loosening the grip a little bit. Now that they've cleaned up things.
Yeah. Now that they've cleaned house a bit. Now they've cleaned house a little bit. Now they're going to allow some of their SOEs, like their automobile manufacturers and whatnot, which are the most corrupt. Now they're going to make them deal with market forces a bit, and this is a good thing. And this is also an effect of the sanctions. It's also an effect of the trade war between the United States and Europe and China. Blah 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 blah. I mean, and so there it is. And again, I've always felt like the Chinese were very transactional about all this. I've always thought that there was going to be a negotiated settlement. I've never once thought that was going to go to war. because China's easy to deal with. Like, let's negotiate like grown-ups. And can we negotiate like grown-ups, please? But we can't do that when Blinken and Pelosi and all the other ones are running around acting like not grown-ups, because they're not grown-ups.
These guys,
they're just children again.
China was on board with us in a very neo-Keynesian way up until the end of Obama's term, like close to the end of Obama's term. They were pulling away after the great financial crisis, but they still trusted us enough to say, all right, we'll buy some gold. We won't get crazy. We're not going to sell our treasuries. Now, after Trump, it's like, fuck it, we're out of everything since COVID.
Well, they're slowly but surely, they're bleeding off their treasuries, right? And they're doing so in a very responsible manner. They're saying, look, if you're gonna saber rattle for war over Taiwan, we're going to sell $50 billion in treasuries. This isn't hard. Like, hey man, stop doing that. Oh, okay. Oh shit. And then they don't rebuy them, and then they go on. But the other thing,
I know that's the thing. They don't rebuy them.
Yeah, and here's the other thing because I actually got contacted by Sputnik the other day about this very issue, and they wanted me to, and I know what they wanted me to say, and I of course didn't give them what they wanted, which was to say, everybody makes a big deal whenever the TIC report comes out and China sold $20 billion to the U.S. Treasuries, but nobody mentions, and it never hits the headlines when they buy $15 billion the next month,
right?
Which they do, by the way. Every once in a while, they buy and then they sell and they rebalance their portfolio. They're rebalancing their portfolio. And that's just the way things are. And it's not the end of the world. And it's not anything, you should look at the trend, and the trend is correct. But during that same time period that China's gone from like 1.1 trillion down to like 750 billion, the Bank of England has gone from like under 300 billion to over 770 billion.
Yeah, so, it's a hide the P thing. It really is.
Yeah.
Japan has to sell. Japan has to sell, then we'll get the Isle of Wight to buy from it. It's an off-balance transaction.
Again, no, that's all part of the credit spread manipulation that you and I were talking about before the podcast. It's about, that's Lagarde's way of supporting Yellen's yield curve control, and by having the Eurozone buy U.S. Treasuries and then use those as a means by which to manage credit spreads between European and U.S. debt. It's very clear. It's in the TIC data. I've been screaming about it like Khrushchev with my shoe for years now. Let's all act like grown-ups. This is what's fucking happening.
Right. I remember that. So basically, if I could just to recap it from what I remember, it's like, Yellen's Treasury got basically said to the British, just keep buying our bonds, and eventually we'll have to ease.
It's not just the British. It's not just the British, but it's the entire Eurozone. And the Bank of England has been the Bank of England, Ireland, Switzerland to a lesser extent. They stopped buying now, but all across the board. I mean, sometimes even Germany bought like some U.S. Treasuries. Not a lot, but they bought some. Right. But if you look at the balances in like the British Virgin Islands, Belgium, Luxembourg, the UK, all of the British protectorates, like that's where all the money's being. That's where all the treasuries are being stuffed. And for all intents and purposes, as far as I'm concerned, at this point in time, the UK's balance sheet is being managed in Brussels.
Right.
Period. Clearly,
so it really wasn't
Ireland. Right.
So financially, you don't see there being a Brexit at all, really, because they know they're still in it together.
No. Brexit. They're doing everything imaginable to kill Brexit. The interesting part about this is something like that. So interesting part about this is something that came up when last time I spoke to Francis Hunt when I was on his show. He said that if you can look this up, that part of any country's exit agreement with the European Union is that the exiting country is on the hook for 10 years. Any damages done to the European economy by virtue of the fact of that leaving. So the UK hasn't left in that respect because they don't officially leave. They're not officially off the hook for any damage to the European economy until 2026, which is part of the reason why there's been this mess, and part of the reason why Brexit didn't work and why Jeremy Clarkson still thinks Brexit was a bad idea. Well, because he's not that fucking smart. He's from the Midlands.
Well, it's poorly negotiated.
Right. This is this part. Yeah, this was a part that was never negotiated. It's in either the Treaty of Lisbon or one of the founding documents, and it wasn't, and it was the one point that was absolutely one point that they were never going to negotiate away. That Britain was still going to be on the hook for any damage done to the European economy, and therefore that's why Brexit hasn't really been fully implemented.
So it's like a city it's like a wealthy suburb trying to secede from a state, from a city. I've seen that before. You can't do it.
The city always says, "Well, we have to be able to tax you for 10 years afterwards."
Right. Well, I live in Stamford, Connecticut, and North Stamford, where I live, at one time was its own hamlet or whatever you want to call it. And somehow in the 70s, the city of Stamford got us to join. And there are people in my neck of the woods that are constantly trying to secede, but they can't because of the exit penalties. So it's the same idea. Mm-hmm. It's the same idea. You can't
exact same idea, nothing new. And that's and then and let's think of it this way, folks. You're trying to build a new economy. You're trying to maintain and build new infrastructure and have a budget for your own place, but you still have to pay homage and pay tithe back to the place you just left for another 10 years. What do you think that's going to do? For 10 years, all the people are going to be like, well, we should have never left in the first place. Does that not sound like the Remainers over in England? And did you not think that that's exactly what the fucking plan was? These people are fucking evil. And why would anyone? Let's just never forget this. It's like example number 4,527,667 of why the EU is evil. Done.
But the terms are known getting into it. I'm just being a little bit of a gamesmanship here. Mm-hmm. So what makes them say, yeah? You know what I mean? Things must have been going really well.
Well,
the point is they agreed to
think of it this way. All the people who negotiated the Brexit agreement didn't want to leave the EU.
Right.
I did this. I covered this. This was the story for me for a year and a half. Most of 2018 and 2019, I covered Brexit in a level of detail that I learned shit about British politics that still makes me shower twice a day. It's awful. Okay,
that's why it's so in the top of your consciousness, I guess, because you're familiar with it.
Every day that I watch it play out, I just see more evidence of everything I saw while it was playing out. Okay, and nothing has changed. And so Rishi Sunak was brought in to destroy the Tories in order to then hand the country over to Keir Starmer, which is what we've got. All of it, I could have plotted this out, in a screenwriting templating program, for Christ's sake, and charted all the friggin' scene cards 5 years ago because I knew exactly what was going to happen. The minute I saw the name Rishi Sunak, and I watched it play out in real time, and I didn't like the first season, and I certainly don't like season 5. Right.
But you've been tape watching this for 5 years then, mm-hmm. So this is your knowledge is a byproduct of that. I understand. You've been studying this shit for a long time.
Yeah.
Which brings us to Yellen.
Which does bring us exactly to Yellen.
It does bring us to Yellen.
Because this was my very unsubtle lead into all of that. Because if you think about it, Yellen, this is why I've been saying why it was so easy for me to see Yellen working against Powell the minute Powell went against Lagarde.
Right.
That's why this was easy for me, folks, because I saw Brexit happen. I saw all this other stuff happen. And I'm like, oh, okay, now it's just another extension of this. So, but let's talk about Yellen.
Okay. So the first thing I want to start out with is before we actually get into Yellen itself, in May, now I was always in the camp of fiscal and monetary being against each other. And my disdain for Yellen has grown substantially, probably starting to really up-ramp during the SVB thing, because I thought she was I thought she was an intelligent ideologue, okay? I thought she believed and knew. Turns out she really is a fucking idiot. And I'm sorry to say it, but it's not like she's a smart neo-Keynesian. She's a dumb neo-Keynesian. And it really pisses me off. What?
She's communist.
Right. Well, I mean, yeah. I mean, I'm not even going to call her that, but I'm not saying you're wrong. I'm talking about it's the lack of intelligence that bothers me, because she's in this fucking like basically. I guess what I'm saying is it's a DEI hire, and I'm not a political person, but she's a token. She's a token. She really is. And I didn't think she was a token. I thought for years, I'm like, well, she must know her shit. She's running the Fed. And then I'd see these things that were wrong. And I'm like, she knows more than me. It's behind the scenes. Like, I kept giving her the benefit of the doubt. And, I'm late to the party, admittedly, because I give people the benefit of the doubt a long time. But when the SVB thing happened, I'm like, and I saw her talking about making people whole or not making people whole. I went, well, you don't say that. That's moronic. Anyway, the reason I'm bringing that up as context is because in May of this year, Zoltan Pozar put out one of his, extremely expensive pieces. And I did not get a chance to see it, but I saw some notes from it. And one of the things that he said that I went, because he was talking about bonds here. And that's what we're going to be talking about, bonds and Yellen and shit like that. But the line that said the most to me was, this is Pozar talking about Yellen and talking about Powell and talking about the fact that long-term yields need to be higher. Okay? And his premise is they need to be higher to fight inflation, to get the economy more normal. And that means stocks need to be lower. All right? But his line was, there is a reverse accord between Powell and Yellen. Meaning, nicely, he's just basically saying they don't get along, which is consistent with what you have been saying and what I've been saying from a different point of view. Anyway, so when you put that together with everything that we've seen and that you and I have talked about and that you have talked about on your own, it becomes clear in light of something that I just saw yesterday, and you and I were just talking about this off the air, that Yellen has been operating, or Yellen's Treasury, I don't think she has the brain power to do it. Yellen's Treasury has been operating I'm not sure of this, I'm in the process of reading now, but Yellen's Treasury has been operating what Nouriel Roubini would call a stealth QE for the last almost year. And I'm in the process of drilling down on it now. And I think it's fascinating because without getting into the guts of it for the moment, what Powell and the Treasury did with QE was they blurred the division between monetary and fiscal. Because to do QE, you're reaching across the divider and you're saying, I'm going to buy your bonds. So you're basically you're blurring fiscal and monetary. And so when Powell said QE is over, he meant he's not going to do that anymore.
Yes.
Yellen is doing it. Yellen is reaching back, doing it by fiddling with the yield curve. And I had seen this and thought, it's no big deal. But the paper that I read by Roubini tells me that Yellen and Powell have been fighting each other since May of last year. I mean, they've been fighting since before then. But since May of last year, Yellen has been insisting that she will borrow the money that we need to fund all this climate woke stuff. And Powell's like, well, you're not fucking borrowing it from me. I'm leaving rates at 5.5%. And she said, oh, yes, I will borrow from you. I'm just going to borrow it in 90-day T-bills. And I thought, okay, she's a moron. But she's not a moron. Or whoever's doing the work for her is not a moron.
Right.
By borrowing on the short end, she artificially is depressing yields on the long end. And having done that, she's effectively done QE. And I mean, I can get into all the details of it, but I'd rather just have you talk about it, except to say that that the Treasury is no longer borrowing money at the 10, 20, 30 year. They're only borrowing at the short end. Now, they always borrow at the short end, 10, 15%, and 80%, 85% is at the long end. But now they're borrowing 20, 25, and maybe as high as 30% on the short end, which means that they're not issuing as many bonds, which means anybody who wants the bonds, because they can convert them to cash, is having a harder time buying them, which offsets all the selling coming out of the other countries, which manipulates bond yields lower, which causes a recession, which forces Powell to lower rates, which allows my dog's barking, which allows this bitch to finance these longer term yields at lower rates because she's forcing him one way or another into lowering rates. Anyway, I'm making him out to be
that's exactly what she's been doing. I'm
just setting you up for your thing.
Yeah, well, no, you did a beautiful job. It's not just that. And FYI, the echo cancellation is doing a fine job of keeping your dog off the podcast. FYI.
Okay.
So no, it's clearly obvious, right? And that that Yellen has been fighting Powell on this and been manipulating the yield curve exactly as I've been saying. It was nice to see Rubini go into it about bills versus bonds. It's a wrinkle I hadn't heard. So, kudos to Nouriel Rubini for the first time in the last 10 or 12 years, actually saying something interesting. I think he blocked me too, by the way, a long time ago, Vince. I haven't seen.
Yeah,
Rubini.
We were talking before about that. I think only your Patreon.
Yeah, I just popped into my head as we were doing this. Before we started the podcast, like Vince and I were talking about what we were going to talk about, and one of the things that came up was, Nouriel Rubini's mutual dislike for both me and Vince. So, but I'll give Rubini credit here because he's absolutely right. T-bills are not the same as bonds. Some people in this market need bonds. These bonds are, honest to God collateral in that way.
Right.
In that respect, and they need those bonds. And if they don't, and if the Yellen keeps the supply of them tight, then the price has to go up as demand stays constant. And so if you kill the supply, this is part of the reason why the 20-year has been, higher than like the bump in the yield curve with the 10s at say 4.1, the 20 years at 4.5 and the 30s at 4.4, right? It's been going on for a long time. And every week and every day, practically, I sit down and I chart the entire internal yield spread. So like the 1 month, 2 month spread, the 2-3, the 3-6, the 6 month 1 year, the 1-2, all the way out. I chart this all the time. Like I have a big long spreadsheet of this, and I show it like on my market reports to my patrons all the time. And I'm like, oop, there it is. And at every moment where it matters to either save Lagarde's ass or save her ass, she comes in at a moment and she bombs the market and she sells a bunch of 2 years to like manipulate the 1-2 spread down hard and ensure that the 2-10 spread stays suppressed. She's been desperate these last 2 weeks because the 2-10 basis points. She's like, it was like, oh my God, you're moving too far. And she's like out there dumping. And then she goes out, and somebody else I saw on Twitter the other day, a couple of weeks ago, noted like from the moment she announced that she was going to be doing treasury buybacks of long dated bonds. And she added to her, well, I'm only going to issue bills and now I'm going to buy all the bonds that are out there.
Right.
Okay. And that's when, exactly. And that's when, the 30-year had hit like 4.75%, or the 10-year hit like 4.75%, and then started to crater immediately. And it had nothing to do with the market. There was nothing happening in the market, and yet the 10-year is getting friggin' crushed down to 4.3. And I'm like, oh Christ, right? And like the moment she announced it, everybody starts to front run it.
Wait, are you referring to recently or back in November?
Yeah, no, this is like in the last 3 months. This whole rally
this is the new
started
round.
in the 10-year started the day that Yellen announced that she would be buying back 20s.
Right.
And then the other day she came out and said, I'm doubling down and I'm buying twice as many. And that pushed the 10-year down from like 4.15 to it closed today at what, like 3.95? And the worst part about this is that you may be people who are like yield curve fanatics may be missing what the yield curve is actually saying. The yield curve is supposedly screaming massive recession.
Right.
Because Yellen's out there putting
Right.
It's like sitting there literally pressing the friggin' yields down. And who is Janet Yellen? Janet Yellen is the woman who was the architect of Operation Twist 1 and Operation Twist 2. Nothing has fucking changed. Her entire goddamn worthless tenure at the goddamn Fed was nothing but yield curve control. That's all she did. So that's all the woman knows how to do.
That's right.
She's good at it, apparently. Well, I guess she's good at one thing.
Yeah.
She's certainly not good at having lunch with any other. She's so distasteful. She can't get anybody to have lunch with her. Did you see that picture of her yesterday, like trying to have lunch like a normal person? Yet there was nobody at the table with her.
You mean the cheesesteak in Philadelphia?
She was eating this Philly cheesesteak, yeah.
Yeah,
and there was nobody there.
Exactly.
Yeah, it's hilarious. Oh my God!
Like
the idea of normalizing these people is just retarded.
I know. Shopping at the supermarket. All right, I have a question about the yield curve then. When you said the 20-year bump, yield was higher, and so she basically acted there and put it in place?
Yeah.
Is that what you're saying?
Yeah, well, the 20 years really low liquidity too.
Right, exactly. So I want to throw this out there for everyone. If you're a bond trader and you're trading term structure arbitrage, let's say you're looking at a smooth curve and you say, I'm going to buy the 10s and I'm going to sell the 5s because you think the line is a little bit out of whack. And if you're looking at the 20 and you see the 20-year yield is just way too high, it's off the smoothness of the 10-year, you say, well, shit, I'm going to buy the 20-year because I think that yield will come down. And then I'm going to sell the 10-year against it, which is kind of like a term structure arbitrage. But generally speaking, those bumps don't go away because the government doesn't operate in a certain maturity, in this case, a 20-year. And so you let it gets out of whack, it stays out of whack, and you just deal with it. So she came in and put it back into whack, meaning, I'm going to call this what it is. She was spending money to hide fingerprints or evidence of a real problem, meaning the 20-year was closer to the real yield than the 10-year. So anyway.
Yeah, absolutely. Or the 30. And the other interesting part about all of this is that since she's done this, she's forced a really deep inversion in the belly of the yield curve. But from the 5 out to the 30, it's a smooth curve up. And those spreads, those internal spreads, the 5.7, the 7.10, the 10, and the 10.30 are all rapidly rising. Like the 5.7 spread hasn't been positive 7 basis points, and since Powell started raising rates, they've held it flat. The 5.7, the 7.10 spreads were flat, like within a basis point or two of neutral for months. And then the minute she starts fucking with the structure and trying to push yields down, and now they've got the yield curve down below where it was in November of last year.
Right.
After they did their, after she started the Bills thing to manipulate the yield curve. And all of that has pushed the German 10-year back towards 2.3%.
Okay.
It's pushed the French 10-year down, right? Remember, the German 10-year, Lagarde has moved heaven and earth to keep it from breaking above 2.6, even though, for fuck's sake, Germany is literally in their manufacturing and industrial base is literally collapsing. You've got year over year industrial production in Germany cratering 10% year over year. Yeah. And the German Bund is still trading at negative 180 basis points to the U.S. 10-year. Are you fucking kidding me? Is that air you think you're breathing? This is bullshit. We don't even have, these people are now manipulating the bond market so completely that none of the other asset classes make any sense. Right?
There are no correlations. No correlations work anymore. None. People cry about, the gold and the dollar. That's just the fucking tip of the iceberg. Nothing makes sense. Germany has no manufacturing. Everybody's moving to China. They're not fighting to keep them. And yet their bonds are trading, the Bund is trading at such low yield.
It still refuses to move.
Yeah.
And Lagarde cut rates, not this past meeting, but the previous meeting, in order to save Deutsche Bank. Or the Bundesbank. I'm completely convinced of this. And Powell's like, nope, holding rates.
Right.
Holding rates. And part of me says the market is going to just be very, very disappointed in September. Because I could easily see Powell say, you know what? Nah, everything looks fine.
Right.
Yeah, the economy's breaking, but you know what? I think I'll keep rates at 5.5% for another. Maybe I'll have a couple of dissenters this time in the market, and everybody can try and trade that headline. But dude, still 5.5%.
I know. I was thinking if the 3 big banks that I'm watching, Citibank 7 cuts, 200 basis points. Goldman today 75 basis points by the end of the year. That's what they just said today.
That's
75 basis points by the end of the
that's
year.
actually reasonable given the way the bond market is trading.
No, yes. Well, that's and their reasons are they think unemployment's going to pop higher, and they think inflation is going to fall off. They're seeing data that's saying to them it's really going to extrapolate bad. And fair enough, the analysis is pretty good. And then J.P. Morgan says something similar, but something like, we think you can actually have a 50 basis point cut the next time that they cut rather than 25, which leads me to this. Let's, for this moment, say that you're wrong and the Fed does cut in September.
Mm-hmm.
I think 25 basis points makes the market sell off because the market is so look at where we are now. If stocks are where we are now, 2 months from now, and the Fed cuts 25 basis points, that'll be like, getting a Chevy when you're hoping for a Cadillac. These guys are going to sell.
Okay. Let's put it this way. Danielle DiMartino Booth has been screaming to remind everybody that the stock market doesn't sell off until the Fed starts cutting rates, because everybody thinks in terms of, there'll be more money, so then the stock market is going to go ballistic and blah, blah, blah.
Right.
No, you're wrong. It's like the same people who say that rising interest rates are bad for gold. No. Gold is rising, so you have to raise interest rates in order to keep with gold. When institutional confidence is cratering, which it is right now, which is part of the reason why gold is falling, gold is rising. The Fed cuts rates or raises rates to slow down an overheating economy, and cuts rates to help a faltering economy. Until the Fed starts to cut, no one is going to get in front of the freight train of stock markets continuing to rise, because the Fed's not signaling that the economy's in trouble. This is it's not about the thing. It's about the impression of the thing. It's about the velocity of the thing. It's about the derivative of the thing. Yeah, in a sense.
I mean, I'm simplifying it, but it's buy the rumor, sell the news. It's like, we're going to have a recession, therefore the Fed will cut. I'm going to buy stocks. We're going to have a recession, the Fed will really cut, buy stocks. And then statistically, over the years,
it's the other way around.
Depending on, by the time the Fed cuts, the market has already discounted the cuts, and then it starts to work the other way. That's generally what happens. That's generally what happens. And that was
Intel came out. So here's another one for you. Intel came out today with terrible earnings. They're laying off tons of people, and they're suspending the dividend.
They cut their dividend. They suspended their dividend. Isn't Intel still the number 2 or 3 chip maker in the world?
Yeah, Intel's still a really big company.
I mean, right? I mean, it's,
and you know what that means? That means that Intel's on its way towards bankruptcy.
You don't cut your I mean, that's like a the old phrase, blue chip companies don't cut their dividend. I mean, this is not a bull market. This is that's crazy. Exactly. And they're basically firing everyone.
Yeah, and they're firing everyone.
What is it, 100,000?
But Dexter White and I saw this coming ages ago that Intel was they're going to try and turn themselves into a third-party fab. And then, but we can see this coming ages ago. Anybody who's studied the chip fab industry has known for years that that fabless as a chip designer is the way to go. And it was eventually going to hit Intel. And once the government contracts for their chips dried up, then Intel was going to be done. I've always looked at Intel as one of the chosen companies. They were chosen to be winners, and that's who they are. They have not innovated. They have not innovated well for 10 years. They've been behind the curve in chips for 10, 12 years now, if not longer, honestly. So, but it's just a side point. So I think that this is why I think Powell doesn't want to cut rates if he doesn't have to. He's why he keeps going, the economy is still doing pretty well. There's some reorganization happening. Yeah, there's some layoffs. Yeah, there's things, but it's not terrible.
The economy's reinventing
Meanwhile,
itself.
Lagarde is screaming.
Right.
Now let's talk about Japan. This is all my lead in for Japan.
Oh, that's right. This is so I just have one thing to say about Japan, and because I know this is going to be your thing, because it's really going to you're going to bring it back to the euro yen, which is what you mentioned before. But I see Japan as fighting inflation while we're about to back off fighting inflation. So I just see this whole Fed, Bank of Japan thing working together. But I'm looking at it from a China point of view. But yeah, I want to hear your thoughts on Japan.
Well, no, I mean, I was, I would love to hear you talk about what you think is going on, because I have a lot to say about Japan, other than the fact that I was right. And I hate to like sit here and bust my hand, pat myself on the back, but I am going to do so. I told everybody, don't buy this bullshit that the yen is going to 200. The government of Japan will step in and they will defend the yen. And when they do so, it's going to be epic and it's going to break a lot of people. And I think closing today below 150 on the yen and 161.5 on the euro yen cross, that's kind of breaking everybody, folks.
Right.
And and that means that, I got out, the other day I got out of one of my newsletters. I got out of my Nikkei position because we were up 54% in a year. Like,
right. I know. Yeah.
I'm like, it's time to get out.
Right.
So,
all right. So then let me just ask you some questions about Japan, just from your perspective. Why did they? I mean, we didn't rehearse this, so I don't mean to. I don't think I'm going to catch you flat-footed because this is an area that well.
Yeah,
why did they stop? Why did they stop? I mean, this is why did they decide now to stop letting it devalue the yen?
Because they needed to really begin to signal to their corporates to start repatriating capital. Okay, so let's say you're Toyota, let's say you're Honda, or you're Yamaha, or whomever. You're making all this money overseas. You've got a weak yen. You've got all this money overseas, but you need that money to start coming home. You need that money to come in and support the bond market as you start to rate. You're going to allow rates to rise, and you don't want the stock market to fall. You need the money to come back home. Well, you can't do that if Powell's sitting at 5.5% and you're making 5.5% in money markets on your profits. That money needs to come home. How do you make that come home? They know the Fed is going to cut rates. So that interest rate arbitrage is that's high now, is going to start collapsing. Right. So
it's going to start
so they want it to, and that's how they need to, and they can do so right now with oil at $80 a barrel and US natural gas prices in the shitter. So because now their cost of securing future oil prices or energy costs are going to be low for the next 6 to 9 months. And they're going to and I'll bet you dollars to dog shit, they're going to lock in as many long-term contracts for Russian and American LNG and oil and everything else. And then they're going to start allowing the yield arbitrage to collapse, or the difference, that arbitrage to start to collapse. And they're going to allow that capital to flow back towards Japan and stabilize things. What we're also seeing in Japan at the same time is very mild fiscal. They're slowly but surely doing fiscal reform. So we got some new minimum wage laws, but we're going to get lower taxes and we're going to get some other things. And so they're playing that game they're cleaning things up on the fiscal end. They're tightening on the monetary end. The whole country is changing. The structure of Japan is changing. Right. It's happening. And they have the money. They have the BOJ is sitting on a shit pot of friggin' Nikkei stocks. They're sitting on a shit pot of friggin' US treasuries. They're sitting on a shit pot of JGBs. They can manipulate all of those prices to their content for a long frickin' time.
Okay.
While everybody else loses their mind. At the same time, all of this is in the context of very, very tightly controlled currency exchange rate regime, and manipulated by the Fed, the ECB, the BOJ, the BOE, all the major central banks, the Swiss National Bank, everybody propping up the euro.
So this is just good for the US.
And again, just appreciated 12% over the last 8% over the last 2 weeks.
Right.
That's going to blow all that shit up. It's going to blow up everybody's hedge book. It's going to blow up everybody's FX books and their interest rate swaps and all the rest of it.
Right. The carry trades are dead.
Mm-hmm.
That's right. Gold is down 10% in yen terms. So there you have it.
Mm-hmm.
All right. So how does this hurt China?
I don't know that it hurts China. Why would it hurt China?
I thought the weaker yen hurt China. It's
exactly.
Okay,
it doesn't hurt
the
China.
weaker yen makes it hard for China to export locally. It becomes a problem, and I'm like, all right, this is forcing China to devalue. This kind of helps China, I think.
Yes, it does. And by the way, the onshore yuan rose from 7.28 back to 7.22 this week.
Right. So
It's the lowest. It's not a lot, not a big move, but it's the lowest it's been in weeks. Because every Wednesday and every Friday, I check all 5 of these currencies: the dollar, the yen, the euro, the pound, the ruble, and the yuan. I look at them every Wednesday and every Friday, every Sunday, every week.
People, it's so important to look at currencies, and people think that they're too esoteric that aren't that familiar with it, especially commodity people. But the reality of it is currencies are, at the simplest form, currencies are the stock price of a country.
Exactly.
And the stronger a currency is, the better a country is doing. Now, there's other problems with that, but what I'm confused about. Again, I'm sorry.
Sure. No, go ahead. You're confused about what?
Well, I'm not really confused, but I guess what I'm wondering is if look, I see Japan is orchestrating a recession. I'm looking at it that way. That's not necessarily what their intention is, but they need to support the yen. And they also recognize that their domestic industry, as profitable as it has been by lowering the value of the yen to export more, is now feeling the pinch on the expensive part of the resources they have to buy. So the resources that they have to buy to restock up on are hurting them. So they're strengthening the yen. That will allow them to sell Japanese bonds out. It will also, again, help China. And I'm looking at Japan helping China. And if the U.S. were to ease, we'd be helping China. Why are we helping China?
Well, I don't think China's our enemy. I think this is part of the negotiated settlement.
Well, okay, and I don't think the Fed's going to ease. You follow me?
And maybe the Fed won't ease. Maybe the Fed's easing relative vis-a-vis China is via the Bank of Japan.
Right.
Right. So now
they work for us anyway. I'm sorry, that's a snobby thing.
Exactly. The BOJ is the Fed's wingman. So if the Bank of Japan tightens here, allows the yen or intervenes in the yen, which makes it a little easier for China to overcome any potential tariffs that come in, or blah blah blah, or it sets the stage for a potential negotiated settlement. And everybody, and I mean everybody, other than Lagarde and Yellen, are setting the table for a return of Donald Trump to negotiate out. And Kamala Harris is sitting here, with no plan. So now, given that, let's talk about what your 2 cases are for who wins the election. How does the Fed react to Kamala Harris, and how does the Fed react to Donald Trump, if there are any differences? I have my plan. I want to hear yours first.
Okay. Assuming Trump wins, just working with the political bias, meaning the political economic bias of Trump versus the Democrats. Trump is, generally speaking, he's a classic corporatist. So he's going to be about spending less on the fiscal side and easing more on the monetary side. So he's less worried about unemployment and more worried about inflation. So by lowering rates, you give the illusion of, look, Trump's financial behavior will be similar to a neo-Keynesian in the sense that he will stop spending like Reagan and he'll want rates lowered. Now, moving to Powell, will Powell do this? I don't think Powell will do what Trump wants, unless Trump gets the fiscal side to spend less. So then maybe Powell will be more, unfortunately, he doesn't like Trump, I'm sure. Unfortunately, he will have to agree with Trump on the basis of the math. If there's less spending, then Powell's going to be more comfortable easing. That's my feeling on Trump for Powell.
Okay, so how many rate cuts do you think, if Powell doesn't cut in September, right, and he starts cutting in November, how many rate cuts, and Trump wins the election, how many rate cuts do you think you're gonna get out of Powell? 2, 3, 4, 6? I don't know. How many?
Powell's got 6 months in 2025, right? I think
he's good until 2026.
Oh shit! I was thinking he'd quit after like 3 months. All right.
Why would he quit? Powell, Trump came out and said Powell can keep his job as long as he doesn't like help Joe Biden.
Because if interest rates get to 2%, well, if he gets inflation at 2%, he can say, "Fuck you, I did my job, and now I'm going to get a job at Citadel." You know, like that. That's I'm looking at it.
But okay, but let's just assume that Powell's going to stay until 2026 in order to finish the job of shoring up the domestic banking system and the and fucking the Eurodollar system.
I think I think, assuming that the election is smooth and the transition is smooth, I think Powell cuts less rather.
Yeah.
Between now and when? What's my time frame?
I just say, before, I don't know, March of next year. Does he cut 2 times? Or does he cut 4 times?
The first quarter, Trump. Through the first quarter of next year under Trump. Well, I mean, I know we're just having a little fun here, but I assume that the banks are actually right about the unemployment thing, and I think Powell cuts 1 to 3 times. I really do.
Under Trump.
Yeah, under Trump.
Okay, so what does he do under Kamala Harris?
Yeah, 0 to 2. I think he actually cuts less.
So you and I are close. You and I are close. And
why am I close? I have no fucking idea.
All I really wanted to hear from you, Vince, is whether or not you thought he was going to cut more under Trump than under Harris, or more under Harris than Trump. This is what I think.
Hold on, I want you to tell me anything, but I want to explain very quickly now that I know why I think that. Because Powell and Yellen don't get along. If Kamala Harris is president, then Yellen's going to have even bigger balls, and Powell's going to pull back even more. That's my whole reason. Yellen's gone if Trump is president. That's it. That's all I have to say.
So that's fair. That's a perfectly reasonable way of putting it. I look at it this way. It's similar to what you were just saying about fiscal side and all that. If Trump comes back to power, he wins the election, even if he gets assassinated between November and January, he's going to come in with coattails enough to force we've created the fiscal crisis. The 5.5%, holding 5.5% interest rates for almost 2 years is causing the fiscal crisis that is necessary in order to get the reform. You don't reform when everybody's fat and happy. You reform when everybody is losing their fucking minds. So Powell can't cut until he knows who's going to be president. If it's going to be Kamala Harris, he fucks her like nobody's business and doesn't cut. Maybe 2 cuts in order to keep the banks in order to stave off a liquidity crisis. That's it, because they're going to come in and they're going to want to spend again like they did under Biden and under Obama.
No change under Kamala Harris. Exactly.
Right. No change under Kamala Harris. Therefore, he's not going to cut. He's going to force them to pay through the freaking nose.
Right.
Or whatever. If they want to go to $2 trillion deficits, fine. You're paying it. I may raise rates if I'm Jerome Powell.
That's right.
If they engineer Kamala Harris victory.
Right.
I may come out in November and go, fuck you, 6%. I am not dealing with this stupid commie cunt. They ain't doing it. That's it. We're done. Period. Shoot me. I don't care. Whatever. We're going to 6%. If it's Trump, he's going to get some fiscal reform, probably a lot more than people are expecting, because I can tell you what I've heard is that they know how to deal with the administrative state. They get control of the staffing on day one.
The Trump people, you mean?
Trump and the people around him. JD Vance is the dog whistle here.
Right.
There's going to be a massive staffing change in the administrative state. And there's going to be a whole lot of people that are working for NGOs and whatnot that are all of a sudden find that there's no more outreach programs, and there's no more Pell Grants, and there's no more this, there's no more that. We're not paying for that shit anymore. And they're going to slash $800 billion from the budget. And Powell's going to be great. I'll cut interest rates by 2%. Let's get this done.
So JD Vance is the PayPal mafia coming in and cutting fat.
JD Vance and the PayPal mafia. I think that's part of it. So that's my argument. I think we see 0 to +2 or -2 cuts. So +2, or 4 to 6 rate cuts under Trump. I think Powell's going to stay in play, and then he's going to. It's like, look, Trump, we're going to make you look good. Cut spending on Capitol Hill. Cut the deficit in half.
No, that's right. That's right.
And then we can start the process of moving towards 2026 when Powell's gone. and then Trump can put, I don't know, Judy Shelton or somebody in at the Fed who's then going to issue gold-backed tips and all the rest of that shit. And that's the plan. And that's why it's never going to happen.
It'll never happen. It'll never happen. Okay. Wait. Look, the thing about Trump is, and I'm not going to pretend that I know him, but I know his negotiation style from his real estate days in New York and people that I worked with that worked with him, is that he loves to negotiate. If he's going to shit on someone to be a bully in public, he's going to be the opposite in private. He's like, oh, let's work it. Of course, he thinks he's negotiating that way. He's a teenager thinking he's negotiating, but really what he's doing is he's showing his hand. That's how I look at it. Now, of course, I could see Trump saying, listen, we have in private, not in public. In public, he wants to fire him. In private, it's like, listen, we don't get along. I want you to ease. You won't ease. What do I have to do to make a deal with you so you ease? And Powell's going to say, you know what you have to do. I need less fucking fiscal spending. And he's like, well, I'm going to fire Yellen. And Yellen's gone. And Powell's like, okay, that's good. And then you're going to see your J.D. Vance thing coming in. So
without a doubt, the biggest problem between the biggest worry between now and then is we have 6 more months of Janet Yellen or 5 more months of Janet Yellen.
Right.
Because Trump wins in November, but he doesn't come in until January.
Right.
Okay.
Right.
So what's Yellen going to do to destroy the world between now and then?
Right. There's one that's true. I mean, how do you unwind that once it gets started? There's one other thing that I think is more macroeconomic and more political that I'm reading about now. There's that. Let's assume Trump's going to win for this conversation, although it's not a given. But let's assume for this part of the conversation he's going to win.
Sure.
If he wins with a sweep of Congress as well, that means something different than if he wins with a split. So if he wins with a sweep, is he going to cut back fiscal spending or not? You follow me?
No, if he gets that, he knows. I think he knows that he has to cut fiscal spending.
That's the mandate to cut fiscal spending. Right.
It's a mandate to cut spending, and it's a mandate to get the house in order, and it's a mandate to start cleaning house at the administrative level. And the Supreme Court has given him every opportunity now to do so. Jarkissi and Loper, the Chevron deference and the Jarkissi case where the SEC lost, which was actually the bigger deal because now we get a trial by jury when the SEC or potentially someone asked me today, they said, well, would this affect like the IRS? I'm like, I don't know. I'd like to believe it does, but I know flat out that all of this friggin' DOE shit and the EPA and all these friggin' they're all going to have.
You're talking about the Chevron case.
I'm talking about Jarkissi. I'm talking about the guy. Talking about the hedge fund manager who earned his right to a trial by jury for being accused of a crime by an administrative agency. George Jarkissi fought the SEC for 13 years. Naomi Wolf's got a great interview with him explaining what happened. This is the more important case than Chevron. Chevron's important.
Okay.
I'm sorry.
No, I have to bone up on that. I see Chevron. As
really. Look up this case. Naomi Wolf, right after it happened, she did a great interview with George Jarkissi, who fought the SEC for 13 years, and what he got, he fought them over his 7th Amendment right to a trial by his peers, and the Supreme Court ruled in his favor that the SEC can't accuse him of a crime, drag his name through the mud publicly, and then instantiate a Star Chamber court of their guys, an administrative court of their guys, to then pass judgment on him. He fought them for 13 years to get that should be a trial by jury. You're just the SEC. You're just it doesn't matter. You get a trial by jury.
You're not
a real
peers.
jury.
You're not his peers.
And so at the very least, that puts the brakes on all of this administrative Star Chamber bullshit that's been going on with all the agencies forever.
Right.
That along with Chevron, it completely changes the complexion of the court system versus the real, in favor and rebalances it back towards the people as opposed to the government.
Right.
But those two things alone are massive.
So Trump comes in with a mandate. The fantasy is for Trump, right? Forget about Powell. The fantasy for Trump is overnight, all the bureaucracy is gone. Obamacare is dismantled, et cetera, and all the fiscal spending stops. Powell's going to cut 4 to 6 times overnight, because he probably will have to, because the market will probably
25 to
drop.
50 basis points over the course of 4 meetings, like about a point and a half over 4 meetings.
Yeah. All right. I'm with you on that.
Well,
But
it doesn't even have to be all the spending. But the thing that I want to remind everybody of is I went back and I looked at the numbers. In 2019, we spent 4.4 trillion and we brought in 3.8 or whatever the hell it was. In 2023, we spent 6.13 and brought in 4.4. Well, if we just go back to the spending we had in 2019, we have tax receipts to cover the 2019 budget. Where did all this other fucking spending come from?
Right.
If we do that and we cut regulations, red tape, and some taxes, cut the corporate tax rate, do another round of income tax cutting and another, dude, we can cover this. And this is Vince, the thing that bothers me more than anything else about the modern world that we live in is that the whole commentary space is polluted with all of this bullshit about how we can't do anything. Everybody in FinTwit says, "Oh, we'll never cut spending. This will never happen." And it's all nonsense because it's all buying into the narrative that's been created by these people, which is basically trying to tell everyone that free markets don't work. We have communists literally gaslighting our finest minds in finance to believe that we can't do basic fucking math.
Right.
And it pisses me off because I look around FinTwit and I'm like, I can't even listen to anybody anymore because it's
that's the thing.
Shit.
That's the thing with deregulation. I mean, I'm going to completely agree with you. Even when we deregulate, and I've seen this in specific industries, we don't deregulate all the way. We deregulate half-ass. Now, we have to deregulate half-ass sometimes because you're protecting and weaning people off of the dole. But when you deregulate, when you semi-deregulate, you create arbitrage opportunities, and all these markets and industries get destroyed because of it. So, for example, let's deregulate. Yes. Here's the one that is the example that proves your point. When we tried to deregulate power, we deregulated natural gas, but not power. And so when we deregulated natural gas and let the price float, we deregulated. And then California went under and other areas went under with brownouts because we deregulated natural gas, but not the power. And as a result of that, opportunists like Enron said, well, fuck that. I'm just going to not transmit power. So it's kind of like we've never really done proper dismantling of regulations. And as a result of that, we end up re-regulating more. So anyway, I'm making an example of your point.
You literally gave the example that I was going to use. I was like, no one can see that. Seriously. I was like waving my arms like an Italian, oh my God, Vince gets it. Because I know this is not a visual podcast, so no one can see this shit. But dude, it's exactly what I'm talking about. That was the exact California electricity deregulation was the worst corporatist fucking giveaway of the 21st century.
Right. When government deregulates,
it's always done in order to make it look worse than it was under fucking under central planning. They do it on purpose.
We tried.
And everybody falls for it.
We tried it for fucking 3 months. Let's try free market capitalism. Well, let's try it for 3 months, and then let's not try it ever again. It's
let's go back to communism. Fuck you.
Exactly. That's it. I remember those days. I remember having friends in California saying we're doing rolling brownouts, and I'm like, why? And I got the answer from a power guy out there, and he said, "This is a power guy." He said, a utility person. He said, "Motherfuckers." This is a California guy complaining. This is a Semper guy complaining about Enron. He said, "Motherfuckers deregulated the price of natural gas, right? And so, but we can't charge free market prices for power. So everyone's got their TV on and their Christmas lights and they're running their air conditioner. And Enron goes like this, oh, busy time of year, we're going to turn off the natural gas faucet. Boom. So the price of natural gas goes to the moon. They can't raise the power price. And so they have to do brownouts. So they can't. Anyway, the point is partial deregulation is a disaster. Always has been.
No, and you're absolutely right. And this goes right back to what we were discussing earlier about Brexit.
Right.
It's the same thing.
That's an example of partial deregulation.
Same thing. It always looks this way. It's always the same fucking playbook with these people. And at the end of the day, we can go back to the halcyon days of 2019 and balance the goddamn budget.
Well,
and
we did have
the reason that they don't want that to happen is because, one, they don't want anybody to prove that, oh my God, the United States isn't descending into civil war and clown world, and two, that, oh my God, we could actually and any of this shit works, because the goal here is a complete and utter demoralization of everybody over everything in order to bring in European technocratic overlords. Like, that's their goal. And they want to convince everybody that that's the case. And it's bullcrap. And it drives me nuts when I listen to very smart people in this space work with boundary conditions, boundary conditions to solving these problems that are patently false. These are false assumptions you are making, and you're putting yourself into an intellectual box that's not valid. We can balance the budget, folks. We just have to fire Samantha fucking Power at USAID. And Cass Sunstein and all the other motherfuckers. They all just need to go away. Like, they all need to get real jobs. Done. We stopped color revolutioning everybody, and we stopped all this bullshit. It's amazing what would happen if we, I don't know, devolve some of the bases. Like the defense budget, most of the defense budget is just paying for maintenance on bases and salaries.
It is.
Like, it's not weapons and bombs, folks. Like, $600 billion of it just goes to like paying for stuff
for franchises in other countries,
for
franchises overseas.
Exactly. Like, yeah. So, I mean, I think that's about everything, man. Like, I needed to get that out of my system. Sorry.
No.
So I'll give you the last word. You do the thing, and then we'll roll out.
No, I don't have the last word today, except. What if Trump, this is going to make people miserable. What if Trump doesn't win? I mean, that's what I'm fucking thinking about.
I know.
What if Trump doesn't win? Because the election is only a poll, Tom. The election is only a poll, and these fuckers can cook the books on polls anytime. And I think it could happen. I'm not looking at the recent data. Oh, Kamala, no, she's not catching up. But I'm looking at,
Vegas odds are telling you that she's not going to win. Like,
the deep state.
People who are putting money on the table are like, yeah, no.
This year as being Hillary in 2016, and I'm going, oh man, I'm like scared.
Yeah,
I'm like, oh, stop it.
I know.
He's doing everything right. He's surrounded with smart people, but I see Obama pulling Kamala's strings, and he's an organizer. He's smart, and if he can keep Kamala out of the daylight long enough, it'll just be another poll. Anyway, I'm sorry. I'm shitting.
You're absolutely right. It's the best way of because all of this stuff is like, it all comes down to these things. And I'll say one more thing, and that is that this is the apotheosis of George Soros and his plan to destroy the United States.
Right.
Okay. And he and Hillary were the first ones to come out to support Kamala Harris. And I think that she may cut a deal with them first, and that forced Obama's hand. But that's another half an hour, 45 minutes worth of.
I think Obama was just holding out for something.
Yeah.
He's like, I'll bless her later on, Anyway,
at the end of the day, let's see how things work out at the DNC. There's a part of me that still thinks that there's another night of the long knives in the DNC on the table.
I know. Her vice presidential pick.
I know.
Like, look, people forget. I want to throw this about the whole Kamala thing. People forget, well, they may not even be old enough to remember, but when Reagan was running, the number 2 person running against him was Ford, and Ford lost to Reagan, and Reagan offered him vice presidency to the point where it was actually discussed with Ford on a 60-minute show, one of those 60 Minutes type shows, where the interviewer said, if you were to come along with Ronald Reagan as vice president, would it be a co-presidency? And
Right.
Ford answered the question. He didn't say the word co-presidency, but he said, well, I've made it clear that if I were to come along as vice president, it would have to be as an equal, not as a supporting cast character. And I look at Kamala Harris, and I'm like, her vice president is the president.
Right.
I'm wondering who that's going to be. Who are you going to have someone support her?
Yeah. Well, look, at this point,
her?
I don't even think I can even see Hillary finally realizing that she doesn't need to have the title just to have the power again behind the throne.
Oh, please. I mean, look, it's ridiculous for us to think about, but all you need is for that to be coming out of the convention, carrying the momentum for 2 weeks, 3 weeks, and people to start lying to themselves. Well, Kamala's not so hot, but at least she's got someone with some common sense behind her. And Hillary's like, yeah, Kamala's not so hot. At least I'm vice president. And I can just fucking see that, Anyway, I'm just concerned about that. That
would be a moment that I'm not allowed to talk about in public. That's all I have to say.
Right. I hear you.
All right. On that note, Vince, I'm going to roll before I say something I'm really not supposed to say. So, as always, my friend, this was an absolute and utter freaking blast, and I enjoyed every minute of it.
Thanks for having me, and good luck on. Well, I know it's not until October, but congratulations and good luck on that keynote speak that you'll be doing at
I do appreciate that as well. Thank you very much.
Yeah.
All right.
Congratulations.
Well, let's roll. All right. Well, and we'll catch up again in a couple of months. All right. Be well, man. Well, that'll about wrap it up for episode 186 of the Gold, Goats, and Guns podcast. I want to thank Vince Lanci for taking the time out on a Thursday evening to chat about all manner of things. And I think we covered a lot of ground in this cast, and I'm really quite happy with it. I always love talking to Vince. He always provokes a lot of, just fascinating ideas and provokes me to be better. So I always appreciate that. Vince is someone who pushes me, and I love that. So with that said, as always, you can follow my work over at my blog at goldgoatsandguns.com. You can follow me on Twitter at TFL1728. And you can sign up for the Patreon at patreon.com/goldgoatsandguns, where you can get just the twice weekly market reports and/or private blogs and podcasts that I put out, or the monthly Gold, Goats, and Guns investment newsletter, where my partner Dex White and I do bespoke content and looks ahead as to what's going on in the world, along with a full portfolio strategy for making sense of all that. If you like the podcast, as always, you could also support the podcast directly on Fountain. We are over there. Do the value for value thing. I would really appreciate it. That's it. I think we're good. You guys be well. You take care. We'll talk soon. Keep your stick on the ice.